So very good morning to everybody. Today we are going to begin the revision of accounting for partnership basic concepts. Okay, we are going to start with partnership chapter. Right from the beginning, we are going to discuss each and every topic. So before going into the chapter, you must be clear about business. What is a business? When somebody asks you, what is a business? How will you answer them? Anyone? We are all commerce people, commerce students. We are all going to be a part of business. So tell me, what do you understand by business? What is business? Yes, anyone? What is business? When somebody is asking you, what is business? No answer? Karthik, please try. Your brother is coming and asking you, you're studying commerce. So tell me, what do you study in commerce? What is business? So how will you answer him? No answer? Okay. So let us start with business. So what is a business? Business is an economic activity. Business is an economic activity. Why economic activity? Because monetary terms, monetary items are included. Economic activity. We are going to deal with money. So business is an economic activity. Okay. And it is undertaken for the main purpose, with the main objective of making profits. That's all. So any economic activity that you do with the main objective of making profit, that is a business. Please keep it in your mind. So somebody is asking you, what is a business? You should tell them it is nothing but an economic activity undertaken with the objective of making profits. It is not only income. Income means you are working under some organization, you get fixed salary every month. Your remuneration is fixed. You understand the difference? Business means it is your aim is not only to make a fixed income, but your aim is to make profits, extra money. You are going to generate extra money. Fine, that is business. Now, this business, we can start it in different forms. We have different types of businesses. Okay. The first type of business is, anyone remembers what is the first type of business? Sole proprietorship form of business. Take it down. Sole proprietorship. Sole, S-O-L-E, proprietorship. P-R-O, P-R-I-E, T-O-R-S-H-I-P, ship, proprietorship. Sole proprietorship business. That is the first form of business. First type of business. Okay. So what did I say? Businesses. There are different types of businesses. Okay. So the first type of business or form of businesses, sole proprietorship form of business. Okay. So what is sole proprietorship form of business now? It is a type of business where there is only a single owner. A business started by one person. Okay. There is only a single person as the owner, and he himself runs the business, operates the business, carry on the business. Is it clear? Sole proprietor. Sole means one. So he will contribute capital. Okay, there is a person, Mr. A. Mr. A, he will bring some capital. He is starting the business. He is managing the business. Decision making is done by him. Everything is done by this Mr. A himself. Okay. Coming to accountancy, in class 11, whatever financial statements that we prepared, trading and profit and loss account, balance sheet, whatever you have learned in class 11 was the preparation of final statements of a sole proprietorship form of business. Okay. Now, there is only a single person. As there is only one person, he will be facing so much of difficulties also. Correct? There is only one person. He will have to arrange the fund. A business, it involves so many risk factors are there. Tensions will be there. Then capital, limitation of capital will be there. You understand? So all these problems are borne by this single person, which will put him under pressure. He is tensed at certain times. So, in order to remove the limitations of sole proprietorship, there comes the next form of business, which is partnership. So, noted, partnership, the idea of partnership comes to remove the limitations of sole proprietorship form of business. I hope it is clear. You're getting the idea. So from now, we are going to see how in a partnership form of business, the books are maintained. In a sole proprietorship, he doesn't have any kind of tensions because whatever profits are earned, he'll take it alone. He is the one only person enjoying the profit. He don't have to think about distribution or nothing. Okay, but coming to partnership, it is not the same. Even though the preparation is the same, correct? As you know, the preparation of trading account, P&L account, balance sheet, the format, the topic, the concepts are all the same with sole proprietorship. But there are certain adjustments to be made. Okay, so that is what we will be discussing in the chapter. Now, coming to partnership in detail. Now you got the framework, how this partnership idea is coming in. Okay, now we will see partnership in detail. So earlier I told you there is Mr. A, he is the only owner. Now he wants to grow his business. He is a sole proprietor. He wants to grow his business, expand his business. So what he needs? He needs more capital. More money is required. And not only that, when a business expands, there are some more matters to be taken seriously. Like from the point of view of accounting, the keeping of the books, maintaining the books. There are so many tasks to be performed. And if he's not that good in those matters, what he expect, he would expect somebody to join him who is excellent in this area. So he wished to have somebody else along with him. So there is Mr. A. So he is inviting his friend, Mr. B. So there is Mr. A, Mr. B, they are coming together and carrying on the business. This becomes partnership form of business. So when B comes in, B will bring capital. Yes. So sufficient capital is received by Mr. A. So they both of them together runs this business. That is partnership. Now I want everybody to see the meaning and definition of partnership in your textbook. Go through. Open the textbook, read the first 3 paragraphs. First 2 paragraphs, nature of partnership. Also the nature of partnership. Keep the video on. Let me see you all reading. Yes. Sharat, please switch on the video. Pavitra, keep it on. Okay, let me continue. Now, in India, all the partnership firms, okay, all the partnership firms are regulated or governed under the Act, Indian Partnership Act 1932. Please don't forget this. I could find some answer sheets still not thorough with this Act 1932. Please don't forget this. Indian Partnership Act 1932. It is this act that governs or regulates the evolution and administration of partnership firms. Clear? Now, it is the same act which defines partnership, Indian Partnership Act 1932, and also Section 4. Section 4, that is also very important. Section 4 of Indian Partnership Act 1932 defines partnership. It is a relation between persons who have agreed to share the profits of a business carried on by all or any of them acting for all. Make it a note to share the profits. Only in the definition you can find to share the profits only. Like you'll find the words only profit. Why the losses are not mentioned here? Why is it not mentioned? Why? Because there are certain kind of partnership where only the profits are shared. Losses are not shared there. There are certain kind of partnership. Not all, but there are certain type of partnership where losses are not shared. And also, you can find some partners also where they do not share the losses. That's why in the definition you find only this to share the profits. Not only that, you can also say that it is understood. In that way also you can understand that if the profits are shared, losses will also be shared. If the profits are shared, that means the losses will also be shared. That is implied. That is there within it. Okay. And not only that, there are certain partnerships where losses are not shared. There are certain partners who are not ready to, who don't want these share of profits and losses. So that's why in the definition you find agreed to share the profits of the business carried on by all or any of them acting for all. The explanation for the last sentence I'll give you when we discuss the features. Okay, that's it. Now, this is a topic which was not discussed earlier. Types of partnership. Types of partnership. And before that, let me add this point. The persons who have entered in the partnership with one another are individually called partners. Individually called partners. So A is a partner, B is a partner, C is a partner. Individually, they are called partners, and collectively, together they are called firm. Underline, firm. Okay, and then the firm will be having a name. A name. That is called firm's name. The name under which the business is carried on is called firm's name. And the next most important point to be underlined is a partnership firm has no separate legal entity. No separate legal existence. No separate legal existence. Can anyone tell me what does that mean? No separate legal entity. Try. What do you understand by that? No separate legal entity. Shubham, can you try? Why is it said that? No. Anybody else? Aditya, can you try? No? It's okay. If you don't know, say no. I'll explain.
I don't know.
No. Okay. No separate legal entity. Let us begin with sole proprietor. I told you there is only one owner. What happens if he dies? He is no more. The business comes to an end. Will the business continue? It will continue. Somebody else will start up the business and that becomes another business. It will not be the same business. A sole proprietor, he is no more. So the business comes to an end. Similarly, now we are talking about partnership. There are two partners, or let it be three partners, A, B, C. One of them dies. Then that partnership comes to an end. There are three partners, A, B, C. C dies. Then if C dies, who is left? A and B is left. The partnership, this particular partnership, it is ABC. Is it possible for them to continue that? No. If they wish, they can continue, but they will have to prepare another partnership deed, another agreement. Okay. If they want to continue, they may continue. But it is not the same as this partnership, ABC. Then it becomes another partnership, AB. Clear? That's why it is said no separate legal entity. Okay? Yes. So underline, no separate legal existence. A partnership firm has no separate legal entity. And the same point you can connect it to perpetual succession. So there is no perpetual succession. It cannot continue. There is no separate legal entity, and because of that, there is no perpetual succession. It will not continue. A partnership firm has no separate legal entity apart from the partners constituting it, and also no perpetual succession. Yeah, that's there. That's clear. Okay. Coming to types of partnership. Types of partnership. This partnership, you can classify it on the basis of duration. Partnership can be classified into two on the basis of duration, on the basis of liability. Liability. On the basis of duration, you can again classify the business as partnership at will. Partnership at will and particular partnership. Partnership on the basis of duration. Duration. Duration means what? Time. Time period. Okay? Time period. Duration, time period. So on the basis of duration, it is classified into partnership at will, particular partnership. Now, on the basis of liability, it is classified as general partnership and limited partnership. General partnership and limited partnership. We'll be discussing it in detail now. Okay. General partnership, limited partnership. Keep your videos on, please. Okay. Coming to the first case on the basis of duration. On the basis of duration, we have two: partnership at will. Partnership at will means it is all up to the wish of the partners. There is no time period fixed. In this type of partnership, no fixed duration is mentioned in the partnership deed for the termination. For what time, for how much time period this partnership is formed, it is not mentioned. It completely based on the will of the partners. Will here means it is a wish or the interest of the partners. It is all up to their wish. Any of the partners can leave such a partnership just by giving notice to the firm, and it is not bound to continue a partnership. So time period is not mentioned. Say, for example, for doing the project, all the three groups have created WhatsApp group, correct? Have you fixed any time period? Once your task is over, you are going to exit it. Or any one of you completed the project, so you think that I have done my work, so I'm not going to be there in this group anymore. I don't want so much of WhatsApp groups in my WhatsApp application. So you leave. So that is partnership at will. Will. Okay, will. It is all up to the interest of the partners. Okay. Yes, that is partnership at will. Coming to partnership, particular partnership. So this type of partnership is constituted for a particular project, something as the name suggests, for a particular time period, for the completion of something, for a task, for a particular task, for a particular project, maybe to construct a building. Once the construction is over, that is over. That is particular partnership. So partnership at will, it all depends upon the will of the partners, the interest of the partners. But particular partnership means particularly for something, maybe for some project, for some task, for a particular time period. Okay. I hope it is clear on the basis of duration. Okay. Shall I move to the next one?
Yes, ma'am.
On the basis of liability. See, from the heading itself, we understood it is something related to the liability. We can classify it into two: general partnership and limited partnership. General partnership and limited. Coming to general partnership, here the liability of all the partners are unlimited. 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 So here, all the partners, they all take part in the management. They are all very active in the partnership. If suppose there is 3 partners, A, B, C, 3 of them take care of this business with so much of care. All of them are very active. They take part in the management. They take the decisions, everything. So everybody is having equal importance. Equal importance. So they are all having the same power in the business. So it is not only the profit, they will have to bear the losses also in the same way. So here, nobody is considered as superior, subordinate, nothing. I am more powerful, you're less powerful, nothing like that. So all have equal right, equal participation in everything. That comes to the case of liability also. So if some losses are incurred, all the partners should bear it equally, which leads to unlimited liability. So all the partners will have unlimited liability. That means if the business is incurring some, facing some losses, to clear that losses, after taking all the assets and everything from the business, still the loss is remaining. Still you have so much of liability left. Then the partners will have to make use of their personal assets. They'll have to bring it from their home. Okay? Yes. That is general liability. Next, we have limited liability. From the name, you might have understood what is limited liability. Limited liability means it is not that all the partners enjoy limited liability. Here, there will be one partner. There is one partner, A. He is having unlimited liability. Unlimited liability. And there are other partners. Okay. Other partners, how much ever partners are they will enjoy, they have only limited liability. That is the case. It is not that limited partnership means all the partners have limited liability. No, it is not that way. There will be one partner, Mr. A, with unlimited liability, and other partners, the remaining partners will have limited liability. Understand? Limited partnership. Limited partnership. So here, all the partners will not have equal power, equal right in the partnership. No, because there is one partner, there is only one partner who's bearing all the losses, all the risk. Everything is taken by one, faced by one partner. So he will be more powerful. Okay, so here all the partners are not given equal rights. All of them are not going to take part in the management. The other partners will be given only lesser importance. Okay, so that is the main classification of types of partnership. We have classified partnership into two. Tomlin, can you tell me what is the main classification of partnership on the basis of? Tomlin, please answer. Irfan, tell me.
On the basis of duration.
Very good. Then?
On the basis of liability.
Very good. So the main classification is you can classify the partnership into two on the basis of duration and on the basis of liability. Coming to duration. Sharat, please tell me on the basis of duration, how many types of partnership you have?
3.
Louder.
3.
Take your headset and come, Sharat. Run, run. And Joe. On the basis of duration, how will you classify partnership?
Partnership at will and particular partnership.
Partnership at will and particular partnership. Sharat, now tell me on the basis of liability, how is the classification?
Unlimited and limited.
Limited partnership and?
Limited liability partnership.
General partnership and limited partnership. Okay. Please read this. I'll share the screen. Once again, please read it. Those who want to take a note, please note it down. I'll be sending the file soon after this hour. Understand? Because I found certain questions from this area when I went through the MCQ, the sample question papers and all. Partnership at will. So that is all up to the partners, their interest, their wish. Particular partnership, from the word itself, it is for something particular. It is for to complete some particular task, particular instruction, particular project, particular for something particular. On the basis of liability, there are two: general liability. That means all the partners are having unlimited liability, unlimited. They will have to make use of their own assets to pay off the liability. Okay, that is general. And it is not like all the partners have limited liability in the case of what? The next one, limited partnership. No, one partner, only one partner is having unlimited liability. Others are having limited liability. Okay. Yes. Now you can see in your textbook. Please open your textbook. Limited liability partnership. There is something else given in the textbook. Limited liability partnership. Did you find that? Switch on the videos, everybody. Please open the textbook. Show me the textbook. Show me that box. Limited liability partnership. Aditya, show me that page, please. Where is that? Limited liability partnership. Show the page. Anila, show your book. Take that page. Huh? You found the box? Oh, okay, good. Yeah. Sharad, did you find the box? Open it. Open the textbook, please. You didn't find? You are on the same page. That box. Got it? Yes. Limited liability partnership. What is that now? It is something totally different. It is not the limited partnership. It is something different, totally different. Okay? In short, we say LLP. LLP, Limited Liability Partnership. It is also a registered partnership form. Okay? It is also a type of partnership which is registered, and it is not registered under Indian Partnership Act 1932. No. There is a separate act. What is that act called? Limited Liability Partnership Act 2008. It is very important. Underline. Don't confuse it with limited partnership. It is not limited partnership. Okay? This is also a type of partnership which is incorporated. Incorporated means it is registered. Where is it registered? Not in the Indian Partnership Act 1932. It is registered under the Act, Limited Liability Partnership Act 2008. And we saw most of the partnership, they'll be having unlimited liability, a feature called unlimited liability. Even in the case of limited partnership, we saw there is one partner with unlimited liability. Correct? So unlimited liability is a feature of this partnership. But it is to remove that limitation, we have this LLP. Here in LLP, all the partners are having limited liability. Limited. Underline limited. So the sentence with limited liability, and also you find one more feature, perpetual succession. Earlier, I told you, other partnership firms, they do not have no separate legal entity, no perpetual succession. Correct? Something happens to the partner, that partnership comes to an end there, game over. But here in LLP, it has got this perpetual succession, also limited liability. It is for these two features. These two were the main limitation with partnership. To remove that limitation, this type of partnership is introduced. Okay. So Limited Liability Partnership Act 2008, it is also a registered partnership, and the main two features is limited liability and also perpetual succession. Okay. Now see the next paragraph. It is viewed as an alternative corporate business vehicle that provides the benefits of limited liability, but allow its partners the flexibility of organizing the internal structure as a partnership based on a mutual agreement. See, it can be of the form of body corporate. Body corporate means company. We have learned about company, no? This LLP, it has got both the features of a company as well as partnership. So it is actually a mix of both of this, company and partnership. You can find the features of company, also the features of partnership, LLP. Company, why? Because we will appoint board of directors and company to take care of the matters. General meetings will be held. Likewise, this LLP, they'll also be following that structure. They'll be maintaining board of directors, meetings will be held, all that. So you can find the features of both company as well as partnership. Why partnership? Because here also they are preparing agreement. There are partners, they'll be preparing agreement. Yes. Now read that features, please. Pavitra, can you please read the features for me? The salient features of the limited liability partnership are as follows. Please read it.
Limited liability partnership is a corporate and a legal
Louder.
entity separate from its partners. Every limited liability partnership shall have at least two partners and shall also have at least two individuals as designated partners, of whom at least one shall be resident in India.
Wait. Okay. Wait. Thank you. So, first point is clear. Second point, they say that for this LLP, there should be minimum two partners. Okay? Two partners. Please switch on the videos, everybody. Please. Okay. So, there will be at least two partners. Minimum two partners. This minimum two partners, it can be either individuals or also organizations. Okay? Minimum two individuals, new partners. That two partners can be either individuals, the normal people, or some organization, some body corporates, anything. And shall also have at least two individuals as. So apart from these two individuals, there should be two more. Apart from these two minimum partners, there should be two more partners. And they are called designated partners. And these designated partners, both of them should be individuals. Okay? And of whom at least one shall be resident in India. So at least among these two designated partners, one of them should be resident in India. He should be present in India. He should be living in India. He cannot go to USA or England or anything like that. He should be there in India. Okay? And why? Because they are the most important people in this LLP for signing the documents, signature, for giving the signature in the check, important documents, for the legal formalities, to face all the legal formalities. Okay, so there should be minimum 2 partners. That is done. And that can be either an individual or a body corporate. Other than that, there should be 2 designated partners. Okay, and these 2 designated partners should be individuals. And at least one of them should be present in India, resident in India. Clear? Okay. I stop here with the LLP. Read the rest also. The Indian Partnership Act 1932 shall not be applicable. So for LLP, we are not going to consider this. What? We are not going to consider Indian Partnership Act 1932. Why? Why we are not considering it? Why, Aparna? Why are we not considering this?
Ma'am, because it is registered under Limited Liability Partnership Act.
Ah, very good. There is a separate act for this. So they do not come under Indian Partnership Act 1932. Yes, that's the point. And again, the point is repeating: perpetual succession, limited liability. Clear? Okay? Okay, read it. And we'll continue with the next topic. 2 minutes break. No need to leave. Keep the videos on. Let me see you all reading. Don't leave. Keep the videos on. Switch on the videos. Okay.